day. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Thursday. We're now at the 14th of November, 2019. We're approaching the 1:30 time zone, and what do we have today? A quiet day. I want you to look. You're not moving much one way or the other. The market is digesting the fact that the U.S. and China just can't seem to reach any accord here for a deal at this point. I thought phase one was supposed to be the easy phase, but it seems that I don't even know why we're bringing back in the intellectual property and those parts that will enforce it, because we had been told before they're just going to do this one on the ag, and they don't seem to be able to even get that done because China keeps changing the goalposts. I don't know how this gets done, but quiet here. We looked at the build that we saw in the EIA and API numbers, and we're still getting a net build of inventory. What I find interesting is a person like Sam Zell, the monster real estate developer who had sold out, about a dozen years ago or so, near the top of the real estate market for the commercial side, and now he's out and he's starting to buy oil. And he's not buying the oil itself. He's buying distressed companies in oil. Very interesting. And, you know, these people show up at the most opportune times. They have pretty good track records. So let's discuss where we're at and how this is all going to play out, because we're coming to the end of harvest. We've been in a correction, as you know, in the market. We've been coming down from the $9.40 area. We're now down to the $9 area. I've told you that the 18-week average of closes is $8.90, and we keep gradually working our way down towards that. As you see on the chart here, we've been leaking to the downside. I don't know the other word to call that, but you still have patterns of lower highs, lower lows. Now, the first warning sign that the market's gone far enough would be when you take out a previous swing line high. It could be one of them, and that would be right now in this 911.5 area in the market. As we take a look where you went today, we've been talking about the 100-day average and the 200-day average. And now the market's right in those two. It had been paying some attention to this, but the 100-day is the bigger average in grains. And you went there today and you found a little bit of support against it. More important is you found support with the Bollinger Band and the 100-day. And so often, that is what I look for, because those zones are very important. So I'm at a key area for me as I watch the market, and the question is what happens with the slow stochastic. Now, when you get the slow stochastic number, and it's made up of two numbers that crisscross each other, they use the same formula. The difference between the two numbers is one uses 3 time frames, because it's a daily chart, 3 days, the other 5. And what happens is one of the numbers quicker than the other, because it's only using, think of it like a moving average, only 3 days worth of data. So both numbers are today under, I want to come back to that, under 20. They're both under 20 yesterday. They're both under 20 the day before. I've got my 3 days in a row. So now as long as the red line stays under 20, I'm going to look for bounces when they come to be sold by the pros. When the red line closes over 20, the odds favor that price and the 18-day average may be ready to make a run at each other, and that would be back up to that level. So bears in control completely as I see it right now. Lower highs, lower lows, momentum down, but you hit a price objective. In the meal market, we keep fighting right here at the 100-day average in green and the 18-day average. The pattern has been lower high, but higher lows. You see that one right through there? So I see this market narrowing in. A sign that this market wants to try the upside would be getting through yesterday's high of 306.40, but I don't think it's got a lot of upside to it. If the Bollinger Band is waiting for it, and that Bollinger Band is dropping to the tune of about 60, 70 cents a day right now. So that's going to put it tomorrow very, very close to that 306.40 level. I think that it's a question of when you get lower highs, lower lows, do you really want to trade that pattern? And that'll be what traders have to ask themselves. In soy oil, this washout between where you're at now and I think the lower Bollinger Band is where you're trying to find the support in the market. Now, admittedly, we made a lower low today, closed about 20 points higher on the day. Is it going to miss hitting that? It could. If it rallies from here, the 18-day average becomes the resistance. Obviously, you'd have to get through this way up here in order to say, oh, you've changed the pattern, and that number is 31.89. Rather than that, if we got to the 18-day average, I would assume you'll just waffle back and forth. Going home, though, trend down, bias down, oversold, missed a key support area. In the corn market, well, this is watching paint dry. You got a 3-cent range today, which is nothing. Momentum is flat here to the point where both numbers are under 20 today. They were under 20 yesterday. They're under 20 the day before, the day before that, the day before that, day before that. Here's my point. You have a fully embedded reading, and instead of the market dropping, it's using that power and wasting itself in not dropping. That's the best way I can describe it. Bollinger Band stopped the rally here the first time you hit it, and you haven't done any better than that if you were a short. Yes, the bias is down, the trend is down, but you seem to have run out of that momentum, even though the slow stochastic, which is the most powerful signal I know of, is staying locked in bearish. When it leaves that, then I'm going to look for price in the 18-day average to come together, but this has become a very boring market. In the wheat market, what I'm watching is how you're bringing in the upper Bollinger Band, dropping it, the lower one coming up, and you've gone into this sideways action. Now, going home, you still have the lower high, lower and low scenario. Problem is you hit the lower Bollinger Band, which is a downside target, held it. Let's assume the market punches through it tomorrow. If it does so, then the 499 level, the 100-day average, is the next support. What will break the pattern? Getting back up and through 517.25. That's what you need to do to break the pattern. It also could turn the pattern up depending on if we break lower and low tomorrow. In the sugar, the first challenge, which was yesterday of this upper Bollinger Band, has again caused the market to go sideways right here. Stalled it out. Overbought condition, uptrend. On pullbacks, I'd look for the 100-day average to offer some support. What you don't want to get through is the low right here, this day's low, which was 1251. That would break the pattern of higher highs, higher lows. Barring that, if you can start getting an embedded reading out of sugar, which you're nowhere near, I'd have a little more excitement. I just see an overbought market that's hit an upside target. Coffee's fascinating for this reason. It loses the embedded reading. I want you to see this. Right here, and normally that says price in the 18-day average, or the closest of it, could be the 100 in that case, going to make a run at each other. Yesterday, it manages to rescue itself and re-embed, and you did that again today. Now, here's the key. With this, you shouldn't, number one, the bulls grab back control, so let me start that way. Here's the danger for the bull. If this market's down tomorrow and you lose that embedded reading, my experience has been when you lose it, you gain it back, and you lose it again, it's a sign that the market's weakened structurally and it wants to pull back. Keep it like it is, and believe it or not, you re-embed tomorrow. And that says that then I think you got a shot at going to that upper Bollinger Band. Tomorrow's going to be a very important day for me in that market. In the cocoa market, I'm not surprised to have 3 days in a row up and over the upper Bollinger Band. Why? Because we came out of all this sideways action, and that's the first step. When you get a pop, what's happened is this market has said, I have bottomed, I have bottomed. And that's the run as people are coming out of those. Now, do you stay over a Bollinger Band more than 5% of the time? No. Do you stay over it typically more than 5 days? No. Go do your count. You go on your chart. You count it and see how many times you find on a chart. That does not mean you're bearish. This is a sign of strength. The question is, for those that want to buy, can they buy it at levels that aren't over the upper Bollinger Band? As for going short, by the way, I'm going to come back to that. Where? Why? I just don't see it. You'd have to break this number to just break the pattern of higher lows, higher highs. So yeah, I imagine somebody picks tops and they do well. I don't know how to do it on that. In the cotton market, back and forth action like cocoa. Sideways here, not breaking out, just back and forth. Now I am reading letters that I like, people that I respect, and they're talking about how what's going on in the commercial side is that the people that are normally hedgers, which means they've owned the cotton, they're selling the board, as we call it, the futures, are not doing that. They're actually buying futures because they don't have the physical cotton. I would imagine cotton would come alive if the U.S. and China can resolve a deal. Without that, I think you're stuck in this play, but I'm a chartist. As a chartist, I see a higher lows, lower highs. I don't know what to do with that pattern. In the cattle market, we still have the bullish embedded reading, so until that's lost, this pullback is just that, a pullback, not the end of the overall momentum to the upside. What could hurt this chart is getting through yesterday's low, because then you could get a pattern of lower highs, lower lows underneath the 18-day average of closes. So I always think of it this way. What do the bulls, if you will, not want to see? They don't want to see yesterday's low, in my opinion, of 123.12.5 taken out. Barring that, they've got to be watching momentum. If they lose it, well, you can pull back to the 18-day average. If you go anywhere from there, I don't know. Feeder cattle, remember we were talking yesterday, is this market going to let loose to the downside because it lost its embedded reading and it came back, or is it just going to stall out? It's decided temporarily to just stall out, hanging at that 18-day average of closes. And today's break in hogs is interesting. You put the market on a closing basis at 73.37.5 underneath both the 18 and the 100-day averages. So you neutralized the bias. However, the swing line is still up and momentum is on the verge of turning down. I would guess if you take out this number right here, 72.85, the problem then becomes you've stepped out of the uptrend, and does the market have it within it to go wherever that lower Bollinger Band shows up? Interesting day in that particular market. Well, as you can see, I talk technical indicators all the time, and we have two PDFs that we've put together with our friends from Modern Trader, and what they do is they explain chart patterns, Gann angles, Fibonacci. You're going to get a whole, if you will, condensed version of seeing pictures, getting an understanding as to what they are, how to work with them. It's nice, quick reading. It's right to the point. Price-time relationship. You know, we have this thing called the Arun indicator that it's not popular, but it's important because it is price time. Is the momentum still keeping up in the market one way or the other? Well, it's all explained there. How do you get to this? Go to our website. Under the free offerings part, you'll just be able to choose the ones you want from there, and they'll be emailed right out to you. You can, if you want, click up here. If you're watching me on YouTube, click the icon. It'll take you right to that page. Or the old-fashioned way, call us. My staff will get everything out to you while you're on the phone. I'm Ira Epstein. You have a good day, and I'll talk